Welcome, everyone. My name is Chad Lubben. I am a mortgage lender in two markets in Chicago, Illinois, and right outside of Charlotte, North Carolina in Cornelius. I'm with my friend Foster Massengale from Puma Homes. Welcome, Foster.
How you doing?
I'm doing great. So Foster and I just wanted to do a recording on not just, you hear a lot of first-time homebuyer seminars. We wanted to give you a seminar on home buying right now. So what we wanted to do is kind of talk through some of the changes since COVID. We wanted to talk through why this is one of the best times I've seen in 20 years and almost 3,700 transactions to buy a home. And we wanted to talk through some of the complications, which Foster is going to really focus on. It is a low inventory market. It is a seller's market. And I've just seen Foster and Puma Homes be one of the best, not only in the North Carolina area, but in the whole country of navigating this. I would say I have 5 realtors that I work with every day that consistently stand out when navigating these difficult transactions, having to buy a home and sell a home in the same day, having to then navigate short timelines and lots of details like moving homes. I would say Foster, his mentor and boss, Phil Puma, Joe Puma, Puma Homes, I see it do as well as anyone in the country. So Foster, I'm honored to have you on today, and let's just dig right into it. So talk to me a little bit about some of the challenges that you guys see in the local market here in North Carolina, and maybe we can relate that out nationally for people not with us here.
Yeah, sure. Chad, thanks again for the opportunity to get on here and, spread some good word and some wisdom if we can find it for some of these buyers, both first time and, those who have, not bought in several years. The environment certainly changed. The competitiveness to our part of the country has definitely grown and grown and grown over the last several years. So it's important to recognize that change and adapt to it so you don't succumb to some of the same things that you're seeing a lot of realtors advise their clients on. And obviously partnering up with a strong lender, strong company like you all there at Summit and your team in particular allow us to hit it out of the ballpark too with our clients. So obviously would be doing a complete injustice if we didn't mention that too. So appreciate the time again to come on here and just chat about some of the things that we're seeing. But you hit it right from the start, right from the get-go. Inventory is super low, and even though rates are, as I'm sure you can attest to, at historic lows, still super competitive. You have a lot of cash buyers who are looking to relocate to our part of the country from a high tax environment, so they're coming down here for cost of living, tax purposes, a more temperate climate, which has always been a driver for our area. But inventory super low. You got a huge increase in buyers, influx of buyers with the cheap rates. Obviously, you have about half the inventory that we saw this time last year. That's just setting up, a lopsided supply-demand curve that's just really making it super competitive for buyers to get properties this day and age.
Yeah, and I would say candidly, a shortage here in our local market of just professionals that work in the industry, right? Title delays, appraisal delays. I've definitely noticed. I see it in Chicago, which is like where my main business is at, and 20 years of production is there. We see this push out of the major metropolitan markets, and you really see a lot of people here. I call Charlotte a little big city, right? It is not Chicago, but you see the great weather here. You see this push out of the major metro markets of the East Coast, like a lot of New Yorkers coming, a lot of Bostonians. Am I saying that right with the Boston people? Bostonians. And you just see this push, Washington, D.C. I think what COVID's taught us is, hey, we can kind of live wherever we want. We are now in this virtual world. I don't think that's going away ever. I don't think us doing things like this instead of me driving a half hour to see you is going to go away. So I think you see a lot of buyers and families just rethinking where they live, and with more time at home, that space is super important. So what do you see with some of the trends of just what people want in a home right now compared to maybe 2 years ago?
Right. Yeah. Like you had said, it's been a complete paradigm shift. People are getting out of high density urban areas and looking, even if there's not another pandemic, they're saying, if there is, I need a yard, I need more space. The amount of times that when this first started going on, March, April, May even, you saw families get out of the minivan with their two kids in tow, and the parents are just rolling their eyes, and a lot of them were saying, mom and dad need their own space, mom or dad need their own office, I need a yard to usher these kids out and let them burn all this excess energy and everything. So that's really been a driving force, but it's one of those things where push comes to shove and you don't really recognize or notice that you need something within reason, of course, that you can quite frankly afford. So
Yeah.
A lot of people who are moving up for the sake of just getting an extra room or getting a home office, that's obviously changing. A lot of commercial space has gone vacant over the last several months, so a lot of work from home. It's just really shown what a lot of these industries can accomplish, not in person. So that's been probably the biggest change, is kind of this suburban push. And Charlotte doesn't even really have a true, from growing up here, I don't really consider Charlotte an urban area by any means, but even clients that we've had that are looking to sell some uptown condos are still struggling because people are, not just looking for, a small flat on the 15th or 18th floor. They want a nice house, white picket fence, as you will, and a nice little yard to kind of escape, the world we're living in right now.
Yeah, I mean, gosh, you guys helped me find my dream home, and that was super important for us. And I would like to say I saw this coming, but no one saw it coming. But I know it was important for us, and I'm seeing a lot of these trends, and I heard it in what you just said, is there is that extra bedroom needed for a home office, right? More office space. There's been this big push away from commercial space. I know, like, I'm an investor. I was looking at commercial space to put our Chicago operation in and looking to partner to buy some commercial space here, and that has all halted. I don't know if that's ever going to change, right? So I agree. It's a lot of outdoor space. I'm hearing that on almost every client that wants to move. I'm hearing, hey, where are we going to have this additional office, right? Because we need office space because we're working from home and we're sick of working at our kitchen, right? With both of us huddled around. And I also hear a lot about, just more space for the kids if there's a family. Would you agree?
100%. And Charlotte's an interesting town. Like you had alluded to earlier, big city but small town feel, it seems. And even with the vast growth I've seen since I moved here in '97, Charlotte, grows in a unique way almost. You don't necessarily need to be in center city or close to it to gain access to, highways or shopping centers. The way Charlotte kind of grows is they supplanted. Ballantyne's a great example of that. Planted a couple satellite office space for some commercial work and anchored by a grocery store, a few other, retailers, and these subdivisions kind of, pan out and spread out around those. So, you're really, a lot of Charlotte, you're not far from what you need day to day. And again, if we're not going into downtown, like these big banks, commuting in, you can really live anywhere. So, I think people are finally starting to realize that.
Cool. So we'll have a lot of people kind of jumping on. We have a moderator, Evelyn, that will mute you guys. If you have any questions, make sure to enter them at the chat. We want this to be fun. We want it to be interactive, but we're going to save your questions towards the end. Otherwise, Evelyn came on with some questions that people had from previous, so we'll answer some of those too. So one of the main things I wanted to get into is, like, why buy? What's the financial impact of this? And I think this is a big thing that people miss. So I have a little, give me a thumbs up, Foster, if you can see this okay on the screen. Cool. So I have this like rent versus buy comparison. This is one I just did for an open house not too long ago with my friend Brock, who's a local agent as well. And it really just breaks down, hey, if we're going to buy a $280,000 home, that's about where a starter home is locally. Would you agree, Foster?
Absolutely.
Yeah, so you can get them for under, you can get them for over, but that looks like about a $280,000 home, right? Here's the financial impact. I always want to let home buyers know it's three things, right? I used to own a lot of rental property. I know Phil, who Foster works for, has rental properties. Like, listen, as a landlord, we're not losing money by renting you the home, right? We're not giving it to you at a discount. You are paying our mortgage. You are paying our taxes. You are paying our homeowner's insurance, and you're usually putting a little money in our pocket. Right, so you're paying your landlord's mortgage down. You could be paying your own mortgage down and building equity. So that's what amortization gain, when you see this right here, that's what amortization gain means. You're paying your mortgage down, not your landlord's. Cool? So that's the first thing, and that's the biggest impact. The second impact, as you can see here, is there is some tax benefit, right? Now, they complicated that with the Trump administration because there's this standardized deduction or auto deduction, right? Itemized deduction, excuse me. So some people get a tax benefit from the income taxes, from paying mortgage interest. You can write it off if you itemize. Some people, the standard deduction will be a higher tax deductibility. So it kind of depends how much you make. A good rule of thumb, usually I see on properties over 400,000, you're going to get some sort of tax benefit by writing off the mortgage interest. So that's kind of the number two thing buying a home does for you. The third thing, and I'll let Foster kind of talk about this a little bit, is amortization gain, is appreciation gain. And what I mean by that is home values go up over time. Cool. So I'm going to tell a little story about a property I bought, and then I'll let Foster kind of go on this point is just local appreciation and trends that he's seen. He knows it a lot better than I do locally. I can probably speak a little bit intelligently upon it in Chicago. But I have people like, it's crazy to me, and Foster, you can shed some light on this too. Like, I have people saying, I got to wait until the election. Like, what does it matter who wins the election of whether you buy a home or not? I don't see how the president impacts whether you should buy a home or not. It's crazy to me. But when you see the appreciation, right, people get paralyzed by timing the market. You are not going to time the market, okay? I am living proof. I am a top 200 mortgage lender in the country rather consistently. I'm pretty much an expert in mortgages and real estate. I would consider myself that now. I swear to God, Foster, I bought a home probably a day before the market collapsed in 2007. It was like literally I bought this property and it fell apart. The whole world fell apart the next day. It was like the worst luck, the worst timing. We were on this great run. No one saw it coming. All of a sudden, boom, there goes Lehman Brothers. Boom, all the financial institutions went down. But the point I wanted to make with this is I never panicked. Now, I became a landlord when I didn't want to become, but I knew it wasn't the right time to sell, right? I rented out the place. It covered my mortgage. It covered my homeowners association fees when I was done living in it. I wrote it out and I waited for a great market. And this year I sold that property and I made $170,000 on it. I don't tell that to brag or impress anybody. I tell it to impress upon you. You don't lose until you sell. And it's those that panic and those that try and time the market is the ones that I see lose. So what have you seen with some local appreciation and just maybe some tips you have about when to buy?
Absolutely. Well, again, like we had touched on before, rates are a good indicator of a good time to place your money. I think what the stats just came out this time last year compared to this year, you can afford up to $80,000 more house with no change in monthly payment, which is fascinating. So whether it's even stretching that number for you right now, or even finding something from this time last year to find something that's even more affordable and keeping your monthly payment down, that's just one thing. And with how low the inventory is, and you have a lot of buyers looking at a small supply of houses on the market. As we all know, when you're looking when you're looking at purchasing, when you purchase and close, you become the next comp for that following listing. And when inventory is so low like this, that margin just increases exponentially from property to property. So, you get a lot of people that are concerned, and rightfully so, at least from their standpoint, that they're overpaying for a property. This house isn't worth it. I'm overpaying. I'm paying a premium, and people love a deal, right? So, but what we tell clients is, yes, there is a slight overpayment for the property just due to historically low inventory. But again, they don't look at even bringing cash to bridge an appraisal gap. They're looking at that final sales price. So when you close on your home, Mr. or Mrs. Buyer, you become the comp for the next house on the street or in the neighborhood. So that's really what we're telling clients. We're helping advise them to make a good financial decision nonetheless, but that is a critical piece that I feel, and we, at Puma Associates Realty feel is important to get across to them that, you're not losing money. You're not paying for something without seeing some benefit down the line. And sometimes you're seeing that appreciation almost instantaneously with this low inventory market we're seeing. So.
Right. Now, do you have a good feel for what appreciation is in this area, what you've seen it?
Absolutely. Yep, absolutely. So I'm on the database right now. So 12 months looking back, Charlotte as a city itself is at 15%. Mecklenburg's 11%. North Carolina overall is 4.5%. So like I told you before, the Piedmont area, North Carolina.
Those again.
What's that? I'm sorry.
Say those again.
Yep, 15 in Charlotte, 11.5 overall in Mecklenburg County, which is the county that Charlotte and some of the more immediate surrounding towns are a part of, as a month change in appreciation. And North Carolina as a whole is about 4.5%. So like I was saying before, why we have such a driver to our part of the state is you're 2 hours from the beach, or more or less 2, 3, 4 hours from the beach, a few hours from Asheville, temperate climate. In the hot months, you can go down to the beach, enjoy some sand and some ocean weather. And then, as it gets fall, which is my favorite time of the year here in the Carolinas, you're a hop, skip, and a jump to Asheville, up in the mountains, some hiking, even closer to Charlotte. So it's kind of what we're seeing.
Yeah, so check it out. Like if you buy a $300,000 place and you overpay a little bit and your plans to be there 5 to 7 years, I'll be transparent and candid with everyone. We knew we overpaid for our house. Foster and Phil had the conversation with us. They went over the numbers. We knew there was a chance that we were overpaying by $50,000, $75,000. It's exactly what we wanted. It's exactly where we wanted to be. We wanted to be on the water. We wanted the boat slip. We wanted the pool. It had everything we needed. So when we looked at the numbers and this price point was averaging 3.5% per year, I made up the overpay within a year and a half to 2 years, right? So I knew I was going to recover the overpay, and it was the best thing for my family. So I think, and maybe you can discuss this a little bit. People get paralyzed by making decisions because they want to feel like they got a good deal, but you need to look at it. How long am I going to be in the home? Like data doesn't lie. Don't make decisions off of emotions. Make them off of data. Would you agree?
And that's critical. Is we don't falsify the numbers. We don't doctor them. We just look at data and use that to project. Without a crystal ball, what we see, and we've been in this business long enough to know. Even in 2007, 2008, we saw our fair share of foreclosures, just like the rest of the country did. But there's a lot of growth in our immediate city, in our broader market, in our region. Even without a pandemic, we were already seeing a huge influx of people from other parts of the country. So we have a lot of companies that are starting up down here, in the Southeast. So there's a lot of underlying driving reasons why this area continues to grow and will continue to grow. And like you said too, it's important. And one of the things that we try and get to the root cause of why you're buying. What is the why? How long do you truly plan on staying in the house? If you only plan on being there for a year, I would not overpay for something that's $50,000 over what it is. But it's all like you had said. It's what you are trying to accomplish with this home purchase, how it's being used and leveraged to accomplish even further goals. Whether it's your first house, your second, third, fourth. Whether you're looking to retire, and this is something that you're trying to find a safe investment. Those are all questions that we look to ask, or we certainly ask and look to get some feedback from from you as clients, you as buyers, as to what is the why, and we'll help and mesh that all together and make a prudent financial decision for you.
Absolutely. So look at it like, hey, a good rule of thumb is if you overpay by 3% for a property, you're going to make that up in a year. If you're going to be there in 5 years, you're in the black, you're profitable off of making this purchase. So I agree with Foster. There are times in these low inventory markets where you have to pay. If you know you're going to be there 5 to 7 years, I'm not saying go overpay by 10, 15%, but I'm saying a 2, 3% overpay might be needed right now to get you the property that you're looking for. And just a 1% bump in interest rates. I've been doing this 20 years. Once again, I've never seen rates at this level. It is like Candyland of interest rate. It is monopoly money. It is ridiculous. Take advantage of it. So just kind of to recap what we talked about, when you're buying a home, you have tax benefits. You can write off the mortgage interest, right? You can write off some of the property taxes. You're building wealth by property appreciation, like Foster hit upon, but also about the comment that I hit is you're paying your mortgage down, not your landlord's mortgage, right? Obviously, the pride of ownership. You can make the property what you want it to be. For me, my house was just all about the stability and life for my family. I can't imagine if we wouldn't have bought a new home. We would have been buying a new home, I promise, during the middle of quarantine, because our other house would have drove us crazy, right? So we've been blessed to have family, have stability, have that outdoor space, have the office space that I needed to work from home, and it's just been a huge blessing. And then, it's yours. You do with it what you want, your rules. You don't have to answer to a landlord. Every once in a while, have a semi-loud party outdoors at 10 o'clock, and I'm not having the landlord being called. So those, just to recap, are the bonuses to buying. I will let Foster kind of take this part of it. Obviously, I'll get into what you need to plan to do as a mortgage professional. But why don't you guys talk about, because I think you're the best I've ever seen do it, when you guys do your buyer needs analysis and how you go about it. Talk about how you guys assess someone's needs from a housing standpoint and kind of your process.
Right. So very simple. It just starts off as just fairly simple and open dialogue, and we want our clients to be as truthful and upfront and honest, with, their intentions with this house, as well as, what they're looking for, because I can't do my job. Phil can't do our job. The other members of the team at Puma can't do their job if we don't truly know what it is you're looking for. So we have a 3 to 4 page, it seems lengthy, but it hits the nail right on the head of a buyer questionnaire of, what is, again, like I touched upon a few minutes ago, what is the why? Why are we sitting here doing a Zoom call, or why are you sitting here in our conference room in our office looking to buy a house? What is the driving factor or driving reason, if you will, for making this change? Is it a first time you're tired of paying someone else's rent, or you've outgrown your space? You've got an extra two kids, 2 kids, and your 2-bedroom house or 3-bedroom house is no longer sufficient, or you just got a promotion and you're looking to further invest into the real estate market. What truly is that why? And from that, even just from the smaller details of what kind of kitchen are you looking for, what kind of bathroom, or where work commute, that sort of thing. That's kind of loosened up a little bit with COVID, but what is your ideal work commute, or this or that, or what other things are important to you outside of just the house, but the location, the neighborhood that is really what you are looking for. And then from there, we certainly push them to working with someone like yourself, certainly yourself on the financing. A lot of people, there's a lot of online mortgage calculators on there, and they definitely trying to bait and switch you, hook you on there with some of these mortgage guys. I've seen so many friends, myself, and clients who are, I got on Zillow, or I got on another one of these third-party websites and did a mortgage calculator, and they said I can afford this, and then when you ultimately get into it, it's a couple $100 more, but they've kind of already reeled you in a little bit, and now that little overpayment is not so much, or now you're kind of contemplating things. So we push all of our clients, if they're not paying cash, but even if they're looking at paying cash, where are you in your life that you can't even take advantage of such cheap money right now, like you had alluded to, a few moments ago. Getting pre-qualified, getting pre-approved, knowing what is comfortable for you. Oftentimes they're setting their budget a little too high, but also they're setting their budget a little too low, and they can afford something. They may be a little bit frustrated, with what they're getting for their money, and they can actually afford a little bit more and get a little bit more of some of those, rehab projects in the house. They can actually increase their price point and get that lumped into their loan and not out of pocket and draining their cash reserves. So we urge all of our clients to speak with a lender, as soon as possible, to really know what you can afford and what's comfortable and what's even, what's worth taking that little reach, or how much is a reach for us if we truly want it.
I would say I've seen more homes lost within the last 6 months by not being prepared to make an offer with a pre-approval, having a planning session, more than I've seen in probably the last 5 years. It is a market that moves fast. You need to be prepared. If I go to a car lot, I'm not just looking for cars. I'm probably a buyer to buy a car, right? I need to be prepared to do that. Otherwise, I wouldn't be at the car lots looking, right? I got better things to do with my time. So I truly believe, this is my professional opinion, Foster doesn't have to agree with me on this, but I think we are the starting point, right? I think you build your budget with a lender. My job is to eliminate all your fears about being a homeowner, to help you set up a budget, to help you plan this home purchase around all your financial goals, and to assist the realtor Foster in setting up the home search where you, the buyer, are going to feel comfortable with the monthly payments, and you're going to feel comfortable with the cash you need to make this happen, right? So let me talk through some of that strategic planning. Here's a few things that you can take away from this that I believe in. I believe someone should buy a home that's about 3 times their annual income. Cool? 3 times their annual income. I do not believe they should take every bit of cash that they have and put it all towards a home, right? I believe the second thing you need to do to be fiscally responsible is to have 3 months of your monthly expenses, including this new home, in a reserve account or a savings account. As low as 3 months, maximum of 6 months. Reason you don't want more than 6 months of cash in a savings account is it's not working for you. You're not getting a return on it. It's too much money sitting in a savings account. Your money's devaluing over time, right? So I think the best thing, in the first place most people should start with to be fiscally responsible, is buy a home about 2.5 to 3 times your annual income, have 3 months of savings. I think when you're ready, when you have that, then you're ready to buy a home, right? But we want to make sure that you plan this home so you can participate towards a 401k. I think that's the number one best investment and the biggest miss that people have financially. Work towards having a 401k, then get into individual stocks. So I usually see the path of creating wealth by starting with buying a home instead of being a renter. That's where most people start, and it's where I think people should start. Cool. So I do believe it takes some planning, right? When you think about this, you need to think like a lender, right? The higher your credit scores, the better rates, the more options you'll have, right? The less you can put down, the less your private mortgage insurance would be. Private mortgage insurance is when you put less than 20% down, right? I see way too many people come to me like they come to me with a contract and they hadn't even checked their credit, and there's 5 or 6 quick fixes that could have gave them if they would have started 90 days before they started looking for a home, and they would have put themselves in a much better position to get a better rate, to get lower costs, to put less down, to pay less PMI, whatever it may be. So my recommendation is get with the lender 60 days before you think you're going to start looking. Cool. We talked about your monthly survival number. Establish what that is. Establish, I call it your personal overhead. How much does it cost to be you per month, right? If you want an example of a budget of how I calculate this every month for myself and my family, I'd be happy to share it with you. So know your monthly survival number, right? Have cash put aside. This says 6 to 12 months. I'm more of a 3 to 6 month reserve account, right? Income. What's your consistent income? Do you have a 2-year history of it? Do you have salary? Are you commissions? Are you changing jobs? Those will all determine what type of loan you can get, if you can get one at all. And then debt to income ratio. What is your debt to income ratio? So the last kind of financial metric I'll give you, I talked about you should buy a home about 3 times your annual income. I talked about you should have 3 months of savings in a 3 months of your monthly expenses, in a savings account. I think the last metric you need to live by is live your life in thirds. A third of your money should go to living expenses, including this new home. You need an expert and an advisor like me to talk you through that. A 33% of your income goes to taxes. The last third should be saved and given to charity. That's what that last third should be. So live your life in thirds. A third living expenses, a third goes to the government for taxes, a third should be saved. Now, sometimes you have to borrow from that last third when you're young, and that's okay, right? It is a forced savings when you're paying down a mortgage and creating equity. So those are just some financial things that I believe. Anything you want to add to that, Foster?
No, but just going back to what I was saying about just transparency and honesty, if you're going through a job change, let us know. If you haven't bought a home before, or certainly if you have, you can relate that there are costs involved, some that you cannot get away from in North Carolina with the due diligence fee and some of your inspection and appraisal. Can't tell you, well, hopefully, fortunately, it's not been too many, but we've had clients that have changed jobs from salaried employees to commission sales, and that knocks everything out of whack. Or they got all excited because they moved from an urban market, for example, like Manhattan, and moved down here where they actually need a car, and they got all excited when they found a house because that was step one. And during the process, what is the one thing that you all say for clients to not do is open up new credit, make large purchases, and they buy a car, and that knocks things out too. And it's most of the time it's seemingly completely innocent and not trying to harm themselves, but they do irreparable damage. Sometimes you guys on your team can work it all out, but sometimes we're left with no options except to back out of the contract, and now they've lost money that they've invested and hard-earned cash that they've set aside for this task to buy a home. So going back to just consulting with an advisor, we do this every day. You guys are experts in your field, and I would consult you for whatever that would be if I needed the advice, and just rely on us. And we won't lead you astray. We'll make prudent financial decisions for you. And sometimes it's not the answer you're looking for necessarily, but it's the answer you need. And that goes across the board for any aspect of life. Is you need people who are telling you what you need to hear, not what you want to hear. So yeah, that's what we shoot to do.
I think the biggest lesson I've learned in my life is work with advisors, not order takers. Have friends that are willing to push back. Have people that are willing to tell you, yeah, you're not all doing it right. Like this isn't, seek out good counsel, right? Work with people that are wealthier with you than you. Seek out people that are better at something than you, right? I know you've done that with Phil. I've done that with my boss and my mentor, Rick. I've just always believed in seek people out that are experts and that are doing something that you want to do better than you, right? So absolutely. I'll move on to some type of loans, and I don't want to get too hung up here. There are a lot of mortgages out there. Cool. Don't get caught up in which one you should do. A lot of people freeze and the numbers and figures overwhelm them. Keep it simple, okay? When I do a home buying consultation, my job is to keep you under the monthly payments that you want to have and that you set as your budget, under the cash that we set a budget for together that you feel comfortable putting towards this purchase, and I feel comfortable advising that it is fiscally responsible, and then I will determine the loan. So I always come back with 2 or 3 options once you're under contract. So I've really broke the process up for mortgage lending into 2 steps. A home buying consultation, that's our initial planning session. A loan selection meeting, that's after you're under contract. We go over 3 or 4 financing options. I make a recommendation, but you have 4 options to choose from. That's really how I believe mortgage lending should work. If you push a button, you are getting 0 advice and you are working with order takers, and the data is only your pre-approval, and the advice is only as good as the data you input. And you are not an underwriter. You do not know how mortgage guidelines work, and you don't know all the ins and outs behind it. So that's why I don't believe in push button. That's why I'm never frightened that the robots and the push button is going to replace me, because I work as an expert and provide great advice. So what are the 3 different types of loans? Conventional loan. There's Fannie Mae and Freddie Mac. You need good to great credit to do that. Usually a minimum, I would say 680 credit score is kind of that break-even point. It depends on property type. It depends on down payments. There's a lot of variables, but a good rule of thumb is about 680 or higher. It makes sense to do a conventional loan. Usually 680 and lower, it depends on down payment. You're going to want to consider an FHA loan, or if you're a veteran, a VA loan. Locally in North Carolina, there are some USDA loans, right? These are lower down payments. They're more credit score forgiving. You can see here under cash needed that it's 3 to 20% down. FHA government loans, it's anywhere from 0 to 3.5% down, right? They are also a little bit more debt ratio forgiving, government loans, okay? But the costs on them are higher. So a good rule of thumb is government loans usually have lower interest rates but higher costs, right? And usually they have other expenses in your monthly payments, and more times than not, you're better off doing a conventional loan, but you need an expert to make a recommendation there. The conventional loan limit in most areas is $510,400. $510,400. When you do a loan amount above that, you're in the last column, what's considered jumbo loan territory. Jumbo loan territory. So, Foster, I know I'm the mortgage lender, but what has been some of your experiences from the real estate side when a buyer has been hooked up? Now, this could be a buyer that you represented or someone that's trying to buy one of your listings, a home you're selling. What's been some of your most challenging transactions with a bad lender, and talk through those horror stories?
You hit it on the head with the push button. You know, I won't use names, not what we're here to do, but we just had, I know brought up in our morning Zoom meeting earlier this week or end of last week that we were 2 weeks before closing on one of our listings, and the lender, we were trying to get a hold of them for the last week or so, and non-responsive, and we all of a sudden finally heard from them that they weren't approved for the loan, and it had been, 30 plus days under contract, due diligence, document supplying, and all of that. And they didn't do what was needed on the front end. And we all know that things come up, life events come up, but we certainly know this particular instance was something that definitely could have been sought out or, evaluated ahead of time, to qualify or not qualify this buyer. And, that in this market, kind of touch upon something else that I'm sure we'll discuss more in depth, but these multiple offer situations, highest and best scenario, everybody just touches on or hears that first word highest. It's not necessarily the highest net number that is the winning bid for a seller. It is, we're assessing from the listing side what is our highest and best. It is what is the safest, and what we perceive, of course, is the surest offer to close on the property, just close on the property and on time. So not necessarily the highest number. There's other contingencies, and we'll touch upon this. There's so many areas within an offer to purchase here in North Carolina that you can exceed others on just outside of just the purchase price itself. So consulting a professional like yourself to really run in. Again, we don't, even I don't do loans every day. I know more than most, but certainly not more than you. of what are possible problem areas, to hedge against the possibility of having to back out on a contract, or even as a listing agent, seeing this over and over. What are some possible red flags, or some things that we can assess or do some more due diligence on the front end to avoid having to go back on the market as a seller, even if the buyer unfortunately has to terminate, or as a buyer protecting that hard-earned cash and not having to do things again, or going back on looking at homes again as a buyer and having to pay another rental payment, and cutting into those savings and all the benefits that you had touched on earlier for that work for buyers. So
you're on the listing side, right? Let's say you have a property and you have several offers and they're all about the same, right? What are you making the decision on? Like, I know when I sold a home, I'm a mortgage lender, so I'm going to focus on the mortgage. There were 3 big banks. I said, don't even, just take them away. I'm not even considering them, right? Just because of who their lender is, I knew they had the reputation of not executing. What are some other variables besides that that you all consider when you have a multiple offer situation? And for you guys tuning in, what that means is there are several offers on the same property at the same time. So you're in high competition with other buyers looking to purchase the home.
Yeah, so we're contacting the individual buyers agents, getting a read and a feel for what the kind of buyer is. I know that it's a case by case, and some sellers love the idea of a newly married couple or a first-time home buyer moving in. Some sellers don't want to give their property to a new client that's just going to turn it into, you make it a rental property. Numbers at the end of the day kind of dictate that too, and where that all lands. But that's something. But there's more than that. It's getting a feel for what kind of buyer this person is. Have they made offers on properties before? Sometimes we're seeing that a buyer's made an offer and under contract on several properties, just trying to get in there. How serious are they? Again, right. How good do we feel that this particular buyer is going to get our seller to the closing table on time and get our client their money? Cash, like I told you, it's very low inventory, so a lot of these multiple offer situations are bidding over list price. So even though we list our property well within the framework of what an appraiser is going to look at, and how comfortable are we that it's going to appraise at the number that this buyer is offering to us, and with the down payment, if they're putting way more than 20% or 20% down, then they're going to be able to bring that extra cash to closing. But a first-time home buyer who's only putting just a little bit down, if the appraisal comes in below because they had to go so far above list price to get the property, and it doesn't appraise, how comfortable are we? Unfortunately, how comfortable are we that this buyer is going to have that cash surplus to bring to closing? So those are all factors that we're looking at. Again, not so much getting the highest price for the house, but how sure are we that this client's going to be able to close on the property? And we're having these conversations too. Sometimes it comes ad nauseum that I'm telling clients, my buyer clients, I work mainly with buyers, what the seller is looking at, and sometimes they get hung up on that. But it's a great piece that we can offer our buyers, is looking at the perspective from the seller, because we have to sell you as a buyer to the listing agent, who then in turn has to sell our conversation to their seller. So there's a few chains in that link that we have to get understood by all the parties. And that's one thing that we certainly value for you and your team, Chad, is you make those phone calls to the listing agents. You reassure that even though this isn't a cash buyer, this is good as cash. I will do everything in my power to close them on time. We are not hung up in some of this backlog of a large corporate entity. Even with COVID, that's even been more exacerbated, that some of these larger institutions aren't able to perform the duties in an adequate period of time, and they're pushing delays and all these things that you guys are able to kind of surpass and overcome. So we greatly appreciate that side of things when we have a buyer to have a little bit out of touch. And listing agents, they love it. They love it, whether or not that trickles down to the seller. Again, we have to sell the listing agent to be able to in turn sell their client on the strength of our buyer. So that aspect from you guys is critical as well.
So I would say, like multiple offers, there's several variables. The main one's always going to be price. Like, they will focus on the price, right? Cash versus lending is another big one. But it's also reputation. Like you guys found my wife and I a home that wasn't even on the market, and it's because of your reputation and because of your relationships and the hard work that you and Phil put in locally to be known as experts and guys that can be trusted. So we got a property that wasn't even intended to list. They didn't even want to list for 4 or 5 months, and Phil and Foster worked their back channels to get us the home. So there's always a human element. When humans run a business, there's always a human element. The sellers are human, right? The house we sold when we moved here, it was a family. I started my family in this home. I wanted to have that carry on to that family, right? It just was special to me. The other, we just focused on that offer. It was close enough. It was a few $1,000s. I'd rather see a family continue on in the house that my family built. So there's always a human element when you use technology and when you're not working with agents and lenders that are built on relationships, their business, you're going to miss out on these things. So just our key on that is work with lenders that are willing to go the extra mile to sell you as a good risk for the loan, and realtors that are willing to go the extra mile to let them know why you want the property. So what are some things that make up a credit score? I'm going to go through this really quick. New credit, types of credit used, length of credit history, amounts owed, payment history, right? Those are the things that make up a credit score. 740 plus is going to get you the best level of interest rates. Below 740, you're going to have what's called a loan level pricing adjuster. Loan level pricing adjuster. That means you have a hit to the interest rate. Cool. So 680 to 739 are very good credit scores. You're going to probably get any mortgage you want. There's just going to be a loan level pricing adjuster to your interest rate. So don't expect the best interest rates. Now, let me tell you, going to Discover or Credit Karma or these online free credit scoring, they are not FICO-based scoring scale. There are different scoring scales for credit scores. Mortgage, insurance, auto, they're all on different scoring scales. What they give you online is dated, old information. A great rule of thumb is if it is free, it is inaccurate, right? It is old and inaccurate. It's dated information. So know that. The only online accurate credit score I know of is myfico.com, right? So if you absolutely have to have your credit pulled before you go to a mortgage lender, myfico.com is where it's at. So those are just some things, a 640 to 679 credit score, you're going to be probably working towards a government loan. 639 and lower, you're definitely going to be working towards a government loan. So just some things to know on credit scores. And a small mortgage tip, 1 in 5 Americans have some sort of error on their credit report, right? So catch those things before you go out and look at a home. Cool. Foster, I know you were recently married. What have you guys done to kind of set your survival number and be on a budget? And what do you see home buyers needing to do to get ready to buy a home?
Yeah, good transparency again. What does it cost, like you had said, to be you each day? What do we really need? What is, although nice, but extraneous? And is it really worth paying extra for that bottle of wine or that new car? Is it not? What really does? And it just comes as a complete case by case basis. But what do you really need? Day in, day out, and what is kind of superfluous and not necessarily needed, although nice, but not needed, and really just honing in on that. And you'd be amazed at, just small little things that are, you come to find out are transactional each and every day that don't necessarily need to fit into your daily, expenditures and how much actually that pads the accounts at the end of each week, month, year, semi-annually. It's quite fascinating, and it's incremental. It's not an overnight change for sure. Something that I know, we had talked about at the core summit there. Things don't change. Vast changes don't happen overnight, but they certainly become instrumental when you implement them, and where you see yourself and how successful it can truly be. So.
Absolutely. I think it's the biggest miss in our country is not doing a monthly budget. When you're married, not sitting down once a month. We work all these hours to make money, and then we don't spend 1 hour per month to budget our money, pay our bills, and be strategic and tactical with our money. I know I used to be there. It got me in a lot of debt. I'm proud to say I've climbed way out of that debt, accumulated a lot of wealth in the stock market. And I would say the one thing it was from is budgeting and looking at my finances every single month. So if you haven't done that, that's a whole nother class that we could teach you, but get on a budget. If you have to do automated YNAB, youneedabudget.com is a great starting point. Kind of skip through these. Closing expenses are different. Here's a good rule of thumb. If you have a 3% down payment, so if you're buying a $200,000 property and you have $6,000 available through a gift from a family member, through your own savings, if you could come up with a 3% down payment, you should at least have the conversation with a mortgage expert and a realtor. There are deals Foster and I have negotiated where the seller pays all the closing costs, where they pitch in part or half. Don't think because you don't have 20% down, you can't buy a home. It's the single biggest mistake I see people make. You do not need 20% down. Now, there are there are grants available, right? They work for certain people. They are the right thing for certain people, but don't just go towards them, right? Talk with a professional, get great advice. Don't think you have to have 20% down to buy a home. Cool. We've kind of hit on income. The main thing to know, if you're salary, you can use that income right away. If you're hourly, you need a 2-year history. If you're commission and bonus income, you need a 2-year history, right? So talk to a mortgage expert before you talk through that. Monthly payments. What are the things that make up a monthly payment? Property taxes, homeowners association fees on townhome and condos, private mortgage insurance, principal and interest of a mortgage, right? So Foster, I'll let you kind of hit on this, but I see so many people make the mistake of just focusing on the price of the property. I want everyone to think about it this way. That price of the property, you are spreading across 30 years. Those taxes, those homeowners association fees, you are paying that every single month. Sometimes the taxes are just as expensive as the mortgage payment. So don't discount the taxes. And if you're buying a condo, the homeowners association fees and how much impact that's going to have on your monthly payment, because it can be a lot. Where do you see some mistakes?
Yeah, that's the biggest thing is clients will say, I'm looking for a townhome or a condo because it's smaller and I can be closer to what I want, and just it's smaller, so it should be cheaper. But you have a lot of condo, when these HOAs do, a lot for you, and that's, I may get some comments there after that. Everybody loves or hates HOAs. There's no in between, but a lot of these 1,800 square foot townhomes or condos are, several $100s if they have, covered and secured parking or a community pool or something that, are really cutting into that monthly payment. And sometimes it's cost prohibitive that they can't even get in there. So, but that comes back to what are you looking for? Do you need something maintained by itself, or, that kind of stuff to cut into your monthly payment and your budget and your savings and all of that stuff. So, those are conversations that we try and have up front. And obviously, as you know, single family homes appreciate more than townhomes, which appreciate more than condos. I'm sure you could, attest to, even more stringent financing hurdles to get over with a condo and insurance and liability and all those things. So those are questions to have if you're looking at a condo or a townhome, and what that truly means as cost, for you as a buyer. So
cool. Talk through a little bit the process of buying a home.
Yeah. So again, we recommend always to speak with a lender so you know what kind of budget works. Get your docs in order. In this market, in our location, you need to have either proof of funds letter if you're paying cash, or a loan approval letter at a fully, something where a lender has done a little bit more than just a 5-minute phone call that spoke on what over the phone and what you make a year and what you owe. It's something that's more finite and more easily sellable to a listing agent and to a seller by way of an approval letter. But from offer time, we'll just operate under the assumption that we did get the property. Once you get an offer accepted and you are executed, we're seeing, depending on where you're looking in Charlotte or surrounding areas, a 30 to 45 day close, sometimes sooner if it's super competitive. And that's from date of under contract to signing those documents and getting those keys. During that process, there is a due diligence period where if you are doing a loan, we're getting that loan underwritten, the appraisal order, that sort of thing, and we're doing our property inspection, making sure there's nothing vastly wrong with the property. Every house is built with human hands and owned and lived in with humans. So things inevitably come up, big and small, but we look to minimize any stigma on certain things, work with collectively with the sellers and the listing agent, and ourselves and the buyers to come to an agreed upon terms of any concessions they're willing to give, any consideration, doing any repairs, that sort of thing. But that process, again, depending on how competitive it needs to be, lasts between 3 and 4 weeks. And after that fact, we're hopefully and excitedly agreeing on things with all parties and moving forward. The appraisals come back, we're satisfied with that number, and moving towards closing with hopefully, ideally, 1 to 2, sometimes 3 weeks left there to get everything buttoned up. So
cool. So just to kind of rehash that, get with me, the loan officer, first, or whoever you decide to work with, right? Let's help plan your home search together. I believe in at least 60 days before closing doing this. Okay? So make sure or 60 days before you go out looking, excuse me. Then you get with Foster. He helps set up the property search, right, with the parameters that I give him, right? So make sure you work with a team that work together a lot, right? It's like if you had a 5-on-5 basketball team and you've been playing together for 2 years and you come grab some new guy and he comes into the team, there's just not, they don't know where you want the shot at. They don't know, your skills and your weaknesses and your strengths, right? It's the same when I work with a realtor that I don't work with all the time. It's just not the same as when I work with a Phil or a Foster, right? Or some of my great agents in Chicago. There's just that common, we know what each other's doing and we communicate all the time. Cool. So like Foster said, once you find the home and you go under contract, there's going to be terms in that contract that are negotiated, right? Kind of simultaneously, you'll be getting an appraiser that's ordered through the lender. That goes out and verifies the value that it verifies that the value that's on the contract that you came to terms with the seller is substantiated by an uninterested third party. That's called an appraisal. It's an evaluation, right? Foster and Phil, then the realtors would recommend an attorney, right? Attorney kind of takes over and helps get to the finish line and negotiates anything needed. You'll then go to a title company to sign a stack of documents about this big, right? It will take about 2 hours, and you'll sign a ton of documents. The lender sends their money there, and then you get the keys to your new home, right? So you'll need, during that process, a home inspector. You'll need a homeowner's insurance agent. So there's a lot of cooks in the kitchen of you buying a home. There's a realtor, there's a lender, there's an appraiser, there's a home inspector, there's a home insurance agent, there's a title company, there's an attorney, right? That's why it's important to work with teams that work together all the time, right? Because like I always see, after you go under contract, my team takes care of the client. My job is to herd all the cats behind the scenes, right? Because there's a lot of them, and not everyone does it at the speed we need them to, right? So it's just super duper important. If you take one thing from this, work with experts, work with teams, work with people that are going to tell you to do the right thing. So we got 2 minutes left. I will just let Foster end it. He already kind of said some things with some do's and don'ts.
Absolutely. We'll start off. Just work with people who do this every day, who are professionals. There's a lot of people in any industry, in any trade, that are doing this, to fill some free time, who aren't as passionate about it and as experienced as others. And I can speak for myself as working with families, whether it's their first time or their 10th or 11th time. It's truly my passion, seeing that spark light up in clients' eyes, that they found a house that they can really either feel comfortable of growing a family, downsizing, their empty nesters, whatever. But nonetheless, I still see that spark, and there's nothing quite like it, truly and honestly. And seeing the excitement and seeing the folks really giddy when they're at the closing table or walking away and skipping down the hallway, and nothing gives me personally greater joy to knowing that they really were advised to the fullest. They really had a companion along the way who is certainly invested in this transaction, but wants to do good and make sure that they're making a sound financial investment. And that carries over to the folks that we work with too. Certainly from your standpoint, on the lending side, our property inspectors, our closing attorneys, they truly are there for the betterment of the people that they are working with and for. And when you surround yourself with people like that, you can deliver nothing but exceptional results and client satisfaction. So do your research, whether you work with myself and Phil certainly, and the team here at Puma, or Chad and his team at Summit, or whichever direction you go. Just do your research. The reviews and the experience speak for themselves. And when you align yourselves with people that do this every day and have a proven track record for success, you won't be left unsatisfied. So I'll leave it at that.
Best way to get a hold of you, Foster, to complete a home buying consultation?
Yeah, right there, my email. Feel free to reach out. It's never too soon. Whether you're planning for the future a year in advance, we have so many clients that I follow up with each day, and wherever they're at in the process. But several that are starting a year down, from when they look to actually move in, or they just got a call that they're relocating out and they need to sell their house, or they just moved to the area, and a landlord decided that they're going to sell their place. So we get a lot of frantic buyer calls. So whatever your situation, just reach out. We're there to de-stress the situation. It's the largest financial purchase you're going to make, in your life. So it's going to be inevitably stressful, but we'll aim to remove a lot of those extraneous stressors out of your life and make sure that you guys are taken care of, well-informed each and every step of the way. And certainly from the lending side of things, you'll get them squared away on that too. So
cool. So you can email Foster. You can email me, Chad at the Lubben Group. You can see it right there. I love the phone. We get like 400 emails a day, so you're always going to get me the quickest. My personal cell phone, 704-495-1869. What's the best way they can get a hold of you on the phone?
I'm like you. Call me. I hate the non-personal communication, so call me anytime. It's my personal cell phone, 704-533-0445. Here for any questions you have.
Cool. Foster, I really appreciate it. I thought this was tremendous information, and it was an honor to talk to you, and thank you for all you do for us.
You as well, man. I appreciate it.